Hello? Hi, it's me, CryptoClick. Yeah, I notice you're trading on crypto exchanges, but without any benefits at all? That's madness. You know, I've been made an affiliate partner with pretty much every exchange out there, so if you want to get some benefits, you might as well set up exchanges with the links that I've got in the video description or in my Telegram and Discord. You can get welcome bonuses for signing up, or even better, up to 20% off all your trading fees for life. Yeah, I know, what a treat. So next time you fancy setting up an exchange, use some of the links that I've got in my video description, because otherwise you're mugging yourself off. Anyway, enjoy the rest of the video. Hello everybody, welcome back. So we're going to talk about what it would take for Bitcoin to actually get to $40,000, and there is a case for this, alright, a realistic case. I know yesterday's video was about the bearish case of the everything crash, and that's something that I favour ever so slightly more than a Bitcoin breakout to 40,000, but both of them have an argument that's reasonable to put forward, to be honest with you. Nothing's straightforward and guaranteed, and the only reason I'm looking to take profit on within this descending triangle is because I bought the bottom over here, and I'd like to buy some stuff and the summer holidays. You know, this has been an epic trade, like I say, and I just want to play it safe. And if we break about outside of this descending triangle, it's a bearish formation, obviously, but if we break out of it, then yeah, we could easily start to build the momentum on this Nasdaq here to create a new all-time high. And this depression, this Great Depression that people have been tweeting about and making videos about, will just be, it's just a relic of clickbait videos, really, and that could be what it is. But just to put it out there, just to make sure you're all aware, because I bought the low on this one, I will be taking profit on this 50 exponential, which is just a little bit lower than the descending trend. And if we build a base above here, then great. So the rule of descending triangles, basically, if we treat this area as the support, which is also supported by a 200 weekly moving average, this yellow moving average here, if we treat that as the support and this is the resistance, yeah, we're in an appropriate position really to have continuation if we were to break out of here. The rule of a triangle formation is that the closer you get to the apex, so let's just say we got rejected and we carried on like this, the closer you get to the apex, the more likely it is that you get a fake breakout and then a breakdown. It's just the way it goes. Similar to if you were to get a fake breakdown towards the end of the apex, you might get a breakout. The formation gets less and less follow through the closer you get to the end of that apex here. So we're in an appropriate place really to have continuation if for whatever reason we broke out of this trend line here. So that's good. And do you know what you can do? Obviously you can stick yourself a measured move. This is what we did with Jasmine yesterday to get yourself a top target of a breakout. So let's just say we broke out. We can't break out this week, obviously. You can break out around here. Then you get a measured move all the way up to what? Almost 20,000, 19,200. That is realistic, right? That is a realistic thing, and that's a new all-time high. What we do from there is a completely different story. Now, what else would it take for that to have continuation? So we've got a Bollinger Band over here. This Bollinger Band top obviously is going to get smaller each time, and in order for this to be an uptrend and cancel out not just the descending triangle and consolidation nature of the Nasdaq, but we need to make a new high, a new local high, and that would be done at this level, so around 15,000 more or less, taking out this weekly lower high, turning it into a new higher high. That would basically make an uptrend, basically, and we'll be okay with that, and we'll be looking for a base to be built at that level and then continuation in its normal fashion, which is an up only kind of chart really. And this has been a decent dip buy. It'd be sad for me to take profit on it, but I suppose these things have to be done. If you don't take profit, you don't make money. Unrealized gains aren't gains at all, are they? So, and I have to respect the overall direction of all markets for the moment, but it's been a decent little run. So what does this mean for Bitcoin? If the Nasdaq breaks out from here and at least goes up to this to revisit its most recent local high, it's a 15% move. We would expect Bitcoin to emphasize that move, so a little 15% on Bitcoin's not a big deal, is it? So we've got 15% is more or less, or should I say close to, between this high, which this is where we're expecting it to go generally anyway, 26,600, or the previous summer highs, or sorry, the previous summer lows, which if we extend this over here, we will see the confluence of that basically, with the low here and the lows over here as well. So between 28 and 29,000. That's realistic if it was to just follow the Nasdaq, but there's also a case to be made that actually breaking out from this level will have continuation up to maybe even 40, which is where we found a significant base around these levels. And again, you know, the $40,000 zone is not just a random zone, it's full of supports and resistances that date back, you know, almost as long as the 30,000 to 28, 29, 30,000. So this might be the range that we break out into, and we form a new range between 30 and 40. So this would be the top target, and you know, expecting a continuation from there would just be hoping. At this point we have no evidence to back it up at all. All right, so there's absolutely no evidence to back up that we will break out from there anytime soon. This could be the top target of what this might look like, just a bear market rally, because remember, Bitcoin does do significant bear market rallies from here to here. That's 130%. That's not unreasonable to expect something like that. We've seen it in the past, in bear markets in the past. We've seen such significant uptrends and bounces that you know, I suppose if you look back at these sort of things, you'd be like, oh yeah, that's pretty sweet. That 57%. This one was a quick 49%, and this one over here was a sweet 100%. So yeah, it would be a little larger than most, but we've also come down a lot faster and a lot harder than previous bear markets, I have to say. So like I say, it's slight hopium, but it's not unrealistic, and it's all based on what the Nasdaq manages to do if it were to break out of first of all the descending trend line, and then secondly build and form a base above this previous high over here, this lower high, 15,000. So I mean, you've got to think of both sides, really. If you're, I suppose, a trader, someone might go, but hang on a minute, you were talking about the idea of this breaking down yesterday and going to all-time lows. I can't take it. Not two opinions. Two opinions. No, but yeah, of course, right? If you marry one opinion and don't have any kind of backup plan whatsoever or understanding of the long-term position on a chart, then you're not going to work. It's not going to work for you. This whole trading stuff is not going to work for you. You do have to think carefully and quite forward thinking about how certain things might behave if they choose to move above resistances. This is just the nature of trading. So yeah, yesterday's video could be the everything collapse, and at the moment we're still on for something that could quite easily resemble that. Resistance here, a consolidation trend line still very much in play in a bearish formation, but there is a chance that we break out from here. Things recently have been pretty sweet, like I say, not just for this everything bounce that we involved ourselves in, but the fact that we had a higher CPA, so basically it's CPI, so we got higher inflation in the US, stocks not bothered. We had another rate hike, stocks not bothered. We're now effectively in a recession, not bothered. So it might be that everybody has started to see it from my perspective, which was that this could have been the low. And even though we were just crossing this Bollinger Band center on the weekly, which is more than a halfway point, the rule is you're 65% more likely to remain in the portion of the Bollinger Band that you're in. And as we've just closed here, it does offer the chance, it's in your favor by 65%, that we travel up to at least the Bollinger Band top, which actually is just lower and will be just lower than this previous lower high. So there is a chance that we at least get up to that level, to be honest with you, and see where we go from there. But you've got to think of what could happen in both scenarios. I am personally going to take profit here, but I'm not absolutely 100% convinced that this goes all the way down to brand new lows, although that is a realistic possibility. What if we were to break out of here? What would that do? So for stocks and indexes, I am taking profit. For Bitcoin, not at all. You know why? Because I use Bitcoin as my trading pair. So every other trade that I do, whether it's into altcoins, I use Bitcoin. So I'm not particularly bothered about the value of the Bitcoin that I own. It's about how many more of them I can accumulate through the form of trading. And so Bitcoin is basically my balance. How many Bitcoins do I have? See if I can double them, triple them. 50% on here, 20% on here. It's a continuous situation. So I'm okay with Bitcoin going up or going down, because the amount of Bitcoin that I own will always be the same. It will just be worth a little less, obviously, or a lot less, obviously, or a lot more. So it's a different style of trading that I employ for Bitcoin, and one that obviously I'm impartial to the moves up or down, because I use alts to increase the balance. That's basically the deal there. So let's have a think about what's going on with Bitcoin here. So Bitcoin, the odds in its favor when it comes to the trend that's forming over here on the RSI. We do have a tiny little piece of bearish divergence, ever so slightly, tiny. It's tiny, so it's not really worth entertaining too much, and it's only second drive, so we could be looking for more. We can see that the Bollinger Band is acting as resistance here, and obviously expanding as the volatility is expanding, so that does offer the idea of moving back up to the top and maybe even piercing it and coming all the way up to that major target of 26,600. So there is a lot going on for Bitcoin. It's not acting extremely strong, but there's a lot going on for it, and as far as mixed signals. We have our golden cross over here, a second one as well. So we talked about the first golden cross within this descending triangle. Now we've got a death cross followed by a golden cross. It's very common to see the second one actually have the follow through, and just like a normal golden cross, you'd expect a retest of that as well. You would just come to expect that. That would bring it down to 22,400 if we were to do that. And again, that would be perfectly fine as well. That's something that we would generally come to welcome. And obviously, if we do come back down any further, I suppose we can entertain the idea of coming back down to 21,600. But breaking down below there, I would not be keen on the entire altcoin or Bitcoin market. I would be looking for it to make newer lows. But for the moment, it's trending okay. It's actually trending all right. Getting support on this 4-hourly on the 21 exponential. So today is Sunday, as I'm sure you all know. And it's, in my opinion, the worst day to trade anything, because any gains that are usually made through the weekend largely get sold off towards the end of the day, just through safety purposes, waiting for traditional markets who have the, I suppose, the authority over crypto at the moment. Really, there's no getting away from it. Traditional markets play a major role, because everything opens tomorrow. We've got commodities opening, we've got everything opening again tomorrow, and that is going to have an effect on crypto. We know that. We come to know that. So there might just be a genuine sell-off in crypto today. That again is something I usually come to expect. This is why I usually see Sundays as the worst trading day for crypto ever. But moving into tomorrow, the silver lining against all of this is that we will have a weekly open for the Nasdaq, which is above that weekly, so above that Bollinger Band on the weekly. We'll also have a brand new month open as well. And if we look at the state of this monthly candle, obviously this is going to close. You can't get away from this. This is what's known as a bullish engulfing candle for the weekly. For the monthly, sorry, for the monthly. I need another coffee, guys. So this again is bullish as well. So we got a bullish engulfing candle on the monthly for the Nasdaq, and what would we have over here for Bitcoin if we were to look at that on the monthly? It's a little bit, I have to say, of a lagger of moving averages and analysis, really, when you're looking at Bitcoin on the monthly, because it is such a slow burn. But this is far from a bullish engulfing candle. It's not a bullish engulfing candle at all. In fact, we're struggling to close green. Now we could close green, but we might not. It's basically, I suppose, well, it looks like a brand new month already, but I mean, it's a fine mess. It's a fine mess. So we're all focused on the monthly for traditional markets, and the weekly for traditional markets, to see if we get continuation and follow through, which it does look like we will, at least to the trend line. And if we break that, then there is the idea, realistically, that Bitcoin goes to 40 or 41 over the next, well, let's say 4 to 8 weeks. I know how it sounds, goes against everything that I said yesterday, but remember, you can't just have one analysis for everything. You do have to think about a variety of different analysis, otherwise you will never be able to make successful trades. Right, I'm going to leave it with you there. So a little bit of hopium, definitely, and it's all based around traditional markets and how they behave. Fingers crossed, I'll still take profit on traditional markets, but we'll hope for the best that we do get follow through on the Nasdaq, which would then transfer to a healthier Bitcoin with a top target of about 40 to 41 over a 6 to 8 week period. But look, if it breaks down, it breaks down. That's the analysis that I provided yesterday, which is still my overall preference, I have to say. But this one comes at as a close second, you know, because we will have to see how we perform on this one. There's an argument on both sides. Right, I'm going to leave it with you there. Good luck with your trades, guys. Good luck with your trades, and play it safe, really. I think safety is still key. The Bitcoin market cycle is still very much one of an overall bear market anyway, you know, determined to end between between September and December. So there's every reason to expect further downside, but look, We'll just see how the next few weeks unfold, okay? Right, thanks for watching, guys. Hope you have a nice day. Take it easy.